Hey, this is Sasha Evdokov here from investinghelpdesk.com, here to answer a few of your investing and trading questions. So this week's question is, when you evaluate stock charts, do you use logarithmic or linear arithmetic charts? So this question refers to the type of charts that I use. Basically, it's based on scale. So I want to share with you a visual here, and that will help illustrate a few things. So first, when we look at this arithmetic scale, you can see that everything is proportional between the number 1 and 2, between the number 2 and 3. The distance between those hash marks is the same all the way up to 13. If we take a look at the logarithmic, you can see that as we go to the higher numbers, the distance between 5 and 6 starts to get smaller than the distance between 1 and 2. The distance between 6 and 7 gets tighter and tighter, and the distance between 7 and 8 gets even tighter. Now, as we continue to move to the upper end, I didn't even have space to put the numbers in there, but really it starts getting closer and closer together. So that's really the difference between the arithmetic and the logarithmic version. So basically, what are arithmetic charts? Well, arithmetic charts are also known as linear charts, which means the price values on the chart are the same distance or lengths, just like you saw in that diagram. Whereas the logarithmic charts or log charts stretch that scale. Now, this is typically great for stock charts that are a little bit overextended or explosive. So that's typically when you would use it. So again, take a look at this visual right here with the arithmetic, and take a look at this with the logarithmic, and you see the difference here. Think of this as being your price scale. So the question is, what do I personally watch? Well, typically I look at the arithmetic charts more than 99% of the time. Now, I do look at logarithmic charts from time to time if a stock chart is explosive and it's necessary. However, this is rare and not often. Let's take a look at the charts at some examples here. So let's take a look at some of these charts. So here what I have is Apple, and this is a basic chart of Apple here on the monthly. Now, if we go into the daily right here, this is a little bit more of a shorter term view. Now, you'll notice on your chart, now on my chart it's over on the lower right-hand corner, but on your chart it may be somewhere different. It might be a setting, it might be some kind of other settings. This, I'm using TC2000 or freestockcharts.com. And you have the setting that has an A, which is, as you can see, arithmetic scaling or logarithmic scaling. So pay attention when I switch or click this button to the scale or the distance between the 100, 105, 110, 115, and 120. So if I click logarithmic, notice the difference versus arithmetic. So arithmetic, logarithmic, arithmetic, logarithmic. So you see that the top part gets a little tighter on the log scale. Now this, when you're looking at a shorter term view, doesn't really affect it. For me personally, I like just seeing nice, even scaling and spacing. If I zoom out a little bit more, now let's take a look. Here's arithmetic, which is the same distance between this, which is a 10-point gap. And then here, take a look how it tightens it up. You can see that the top part gets a little bit tighter and the bottom gets a little wider. If we go a little bit further out, again, you can see the difference gets a little bit more. Now you get to see it even more dramatic. Now, if we go into the weekly chart, now I have arithmetic scaling. If I do logarithmic, you can see how it really starts to tightening it up. So you can see the main difference right here. Boom. How that really tightens things up and the scaling changes. So for me, even on these weekly charts, I typically don't use it. I like nice, even scaling. It's rare for me to use logarithmic scaling. From time to time, I do, and I do take a look at it, but most of the time, I'd say 99% of the time, I use the arithmetic scaling, and that is just a personal preference because the trend lines come out clean. But you can see that even in this case, where we have logarithmic, the trend lines do come out nice and clean. But remember that if you're drawing a linear line, it doesn't always come out perfectly on the logarithmic scale versus the arithmetic scale, because the logarithmic, remember, is an accelerated curve. So something to keep in mind. If you'd like to see more questions and answers, be sure to visit me at investinghelpdesk.com, and you can also submit any other questions that you may have that may get created into video formats like this. Now, don't forget to sign up to the newsletter here to get some free training. Just go ahead and click this button right here. Or if you want to see my critical charts, there's a free promotional offer on this website. So just go ahead and click this button right here on the video and you'll be taken to that promotional offer. And if you don't want to miss any videos at all from this channel, then just go ahead and subscribe to us on YouTube. Thanks again for joining me, and remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.